Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, it is Friday. Finally, finally. It seems like the short weeks always seem to be longer than the long weeks. So there you go. But here we are at Friday. We had quite a pullback yesterday, and hopefully nobody got hurt. I was sold out a number of positions, which kind of stinks. But I have some good news, and the good news is I have a kind of a cool trade for you that I just kind of want to show you that I've been working on. I did get a fill on it, which is great, because sometimes you don't. And I think this might be of interest. This is basically an earnings trade. And before earnings, sometimes a stock will move, violently in one direction or another. Now, I do believe, based on my analysis, that it is very likely that that into the earnings for Wells Fargo, which happens on July 14th, it's likely to move higher. So I kind of want to just show you some slides here real quick, and kind of see if you're interested in this. If you are, I'm going to be trying to put a link to. I'll put this out probably at the Action Trade Alerts, but a link to this trade. I'm still working on it, but I did get a fill, and so yeah, I think that this might be of interest to you. So I'm going to kind of just for fun here put it up and kind of give you a look at it. Basically, Wells Fargo, of course, is a money center bank, and it's been beaten down as of late, but it does look like, based on the chart, that it may be pulling up. I just kind of want to show you how the chart is trending right now. As you can see, way back here in December, we went with this, what they call the golden cross, where the 50-day line moves above the 200-day line. So that's looking pretty good. What happened is it did make a high up here. This is kind of where Warren Buffett sold the stock, and then it's kind of been retreating and sort of bounced down here, and then it's come up to about this 46 level, come back down, and I believe it is bounced here. So what I did today is I opened a trade, and basically this is kind of the recap of the trade, and this is how it sort of works. And on these option trades, what I'm doing here is I'm buying calls, but I'm also selling calls at the same time, so that I'm not paying the entire freight, and I'm also limiting my risk. That's a very important thing. When you buy a naked call, that can be very risky because you can run out of time, or and it goes, it doesn't get exercised, so you lose all the money. So one of the things I like to do is I like to do spreads, because with a spread, I'm limiting my risk. So here's what I did today. I bought some of these 4250 calls. Okay, that's the August 20th, and I always give it a little bit of a ramp, even though the stock is earnings are going to be basically on the 14th. So it's basically just got a few days here, even though it's going to be there, and I probably will close it there. I'm going to be very careful, and basically I'm going to limit my risk. So basically, the entry cost for this, now this is for 3 contracts. If you wanted to do just one contract, divide this by 3. My entry cost basically $567, and then I have a potential of 933. That's if it moves above 4750 by August 19th. I probably will not hold it that long, to be honest with you, because it looks like it's likely to move up, based on my calculations, about 4%, about 4.5%. If that is true, by the time the earnings come around, we should be able to net. Let's see. There we go. Okay. By the time the earnings rolls around, we should be able to net basically at about 40. I'm going to say, I think it may go as high as this 46 area, because this is the high, about $318. So I will probably close this early, but it does have a potential of $933. Just kind of wanted to show you this, this spread trade, because it is kind of interesting, and it does provide a very good opportunity, I think, for some for a good trade. Now, what I'll do with this, if you're interested in the trades, I'm going to finish this out. I don't have it up now, but what I will do is, if you're on the Action Trade Alerts, of course, then I'm going to send this out tonight after it's finished. And also, if you're in the Discord room, this is a trade that's right available right now in the Discord room. And of course, if you're looking on TikTok, the way you can see this trade, and obviously you didn't see anything. I talked a lot, but you didn't see anything in the background. The reason is, of course, is that the only way I can show it is on YouTube. So if you want to see this, just jump on over to go to my profile, click the link, and then scroll the way down. I'm presenting this on YouTube, and by the way, this is all being recorded so that you'll be able to see a link. But if you want to get access to this trade, it's a good trade. You'll need to be on the Action Trade Alerts by about 5:30 tonight is when we're going to probably be sending this out. So it's easy to do. Just go to the link, click the link, first and last name, and an email address so that we can get it out to you. All right. Well, thank you very much for that. Let's see if we can get some of the questions here, and let's get going on some of the questions. Thanks for holding here, and hopefully we'll get to your questions right away here. All right. So there we go. All right. So thank you. And the first question, thank you very much, Mark. Let's look at INTT to kind of see how that's looking. See if we can. Oh, I lost my camera. So hopefully we can get that back. There we go. Come on. There we go. Well, it had TradeMan there. INTT. So that's probably a bit easier. Let's see if we can get that. INTT is there. We go. All right. InTest Company. Wow, that's interesting. I'm not familiar with InTest. And let's just kind of take a look at the chart here. Nice chart. It's like moving up very, very nicely. Let's first take a look at the weekly chart to kind of see. It's in this miscellaneous product, electric miscellaneous product category, basically producing thermal and electrical products for semiconductor manufacturers. I do very much like the semiconductor area, of course, because the semiconductor area, there's going to be a lot of investment in this, both from TSM, which is Taiwan Semiconductor Manufacturing, of course, and Intel, as well as some of the other manufacturers, and TI. So we're in a super cycle for the semiconductor industry. There's a lot of interest in it right now. So let's kind of look at the last few months. Boy, I tell you, this is fantastic. It says plus 400%. What this means is that it had negative earnings, but it's turned to positive, and that is quite a good return there. The sales are up 74%. That's not unusual in this category, though, because in this category it tends to be very, very cyclical. Some quarters will be just blowout when they're selling the new technology, and other quarters, when they're not, they're refreshing, will not be. So this is not surprising that was the case. But I am seeing a pretty good chart here. But here's one thing that is to be concerned with. We did have this pullback to the 50-day line yesterday when we had a distribution day on the NASDAQ. And this is significant because this means that this is probably not the leader. Okay, one of the things when you're buying stock like this is you want to kind of concentrate on the leaders, because the laggards, and I'm saying this is a laggard stock, can be very much more volatile than the leader. So I'm going to take a look at this area, and this area, of course, is the area, and this is unfortunately not the leader right now in this area. The leaders in this area basically, Zebra Technologies, believe it or not, and it's even. So let's jump over to Zebra. Now, Zebra, of course, is not in the semiconductor manufacturing area. It's in the barcodes and that kind of thing. This is probably a better stock right now. Now, of course, unfortunately for everyone here, this stock is a $547 stock, so it hasn't split in a long time, right above a buy price. Let's see if we can find something that's possibly a little bit better than that. Trimble Navigation also is a good stock, and let's see if we can find something out about Trimble This, I believe, is a better buy. Yes, it is. It's right below the buy range. Not a terrifically powerful chart, but not a bad chart either. So this one is getting to be buyable. The buy point on this one is 84, 84, 86. Currently, it's trading for 83. So it's right below the buy zone with a 82 relative strength on the relative strength line. That's quite good. One of the things about this Trimble, as opposed to the one that you indicated here, is this is a better stock. It is demonstrably better. It's got an 88 checklist, and it is a leader in this area, and the area is improving. So you might want to take a look at this one. Trimble Navigation, TRMB is the symbol on that one. So not to be a not to be a spoil sport, but that seems to be a better option right now. This is a tough market to trade right now. It's been very weak. We did have sort of a pullback yesterday. I actually was buying this morning, believe it or not, but I was buying a very strong stock, and that's PayPal. And I want to take a look at PayPal right now, PYPL, just to give you take a look at this. This has moved into a buy point, and I do think that this one is quite a good stock, of course. I did have an option spread on this one as well, but now I also have the physical shares as well. I basically bought a half position, and my buy point on this one was 292.75. Currently, currently it's at 299, and it's moving very nicely. Now there is a little bit of weakness on terms of the volume here, but this is one that I just got into. This is totally actionable right now, and it does. One thing to watch out for: it does have earnings in 19 days, so I might be out of it in 19 days, just depending on how it trades. But it's right in the buy zone right now. So if you're looking for something that to possibly buy, this one might be. This one might be something that that would be right for that. PayPal, PYPL. So and just for fun, let's see. Just kind of want to show you my current small portfolio. The stocks is currently in the small portfolio. So let's go do that. And pull up this small portfolio. Just kind of give you an idea of sort of how I'm trading. And this is a relatively small portfolio that I trade. It's sort of a demonstration portfolio, but you can kind of, if you follow along with it, you can see, how I'm doing and kind of what stocks I'm in currently. So right now, this is the way the small portfolio looks. Basically, my biggest holding right now in the small portfolio, and I've been accumulating in this, is DocuSign. That is my biggest. That is my biggest holding currently. Let's see if I can get that. Yeah, there we go. Let's see if I can get that to move down. Okay, there we go. All right. So currently, my biggest position is in DocuSign. I'm up about 23% on this since I started it at 38 days ago. I have currently a stop loss set in here at 270. So that gives you an idea. I have three full positions in this. By far my largest holding right now is DocuSign. Second on that is I just started a position relatively recently, just a few days ago, in Microsoft. Microsoft was in a buy zone, and I did pick up basically a half position in Microsoft. Not a lot. I've only held it for 18 days so far. I have my stop loss at 260 on that one. And if I were called out at this point, I would be in a loss position. So I'm going to be looking to move the stop loss up probably tonight to about even money on this one. I'm also in Nike. I did buy that as it moved into essentially a buy zone, and I'm up about 5% on this one in about 15 days. Not terrific, but not bad either. Basically have my stop set at 150 on this. Currently, Nike is trading for 161.07 up, basically all the last few days. Third in the list is Crowdstrike. This is a computer security software company. Been doing quite well. Also bought it at a buy point. It's up about 3% in 18 days. I do have a half position in this one. No, I'm sorry. I do have a full position in this one as well. Now, what do I mean by positions? Well, if you take a portfolio, let's say the portfolio is worth $8,000. You divide it by 8, it has 8 full positions in that. So I don't typically like to trade any more than about 8 full positions. So if I were to buy a full position, that would be $1,000 worth of the stock. So I typically like to keep my number of stocks down basically 8 or less, and then I adjust the position size depending on what's doing the best. Currently, for me, DocuSign's doing the best. Microsoft is second. I am significantly in cash with about a quarter of my portfolio in cash currently. Now, and one of the ones that was not tech related, I do have Apple as well, is Santander Commercial. It's up about 1%, and this is basically a auto finance company. So that kind of gives you a look-see of kind of where I'm trading right now. So without further ado, let's get back to Fernando's question. Good morning. I'm in AT&T currently. Would you recommend holding or selling? You know what? AT&T T is never been a very good stock. I would recommend selling it. I just don't think, it's just wasting away. AT&T had to cut its dividends, if you can believe that. I mean, it has been literally, I mean, at one time I think this was the most widely held stock in the world. Times have changed. I mean, unfortunately, this business just isn't good. They just keep on making mistakes. With DirecTV, they try to get in the television business. It's just been a disaster. John Stankey, who is the president, has been very, very underwhelming in terms of a leader of the company. And I say that I'm in Dallas, where the headquarters of AT&T is. I don't think you want this stock. I just don't think you. I think there's just so many better stocks out there to make money on than AT&T. AT&T just has not been a good stock for an awful long time, as you can see by this chart. I want to show you the monthly chart to give you kind of an idea. It has really done nothing, literally, since 1991. I mean, it really has not done anything. And people used to say, well, it has great dividends. Well, maybe it does, but there's just other better dividend stocks out there if you're looking for a dividend play. So I would really consider selling this one. I just don't think it's going to get any better with AT&T, but I really appreciate the question because a lot of people own AT&T, and have owned it for years. I just don't think it's a good stock. I just think it's underwhelming in every way. So I would probably be a seller, to be honest with you, of AT&T. I really would. Jim, you said that if a stock closes, it's where a stock closes that matter. Are you happy with Nvidia close? Well, probably not. It's been pulling back. So let's take a look at Nvidia. And of course, I've been touting Nvidia, and I still believe, it may move up from here. But I'm not totally dissatisfied with an 801 close. As you can see by this chart here. I basically bought it at the breakout, then here, and then I've been shaken out. So it has pulled back to the 10-day line. I do think that there's an opportunity. I do think that it probably will trade higher into the it probably will trade higher into the into the split. Now it is splitting 4-for-1. So here's what I'm doing. I'm drawing a trend line on this, and I just kind of want to show you. Now, if this follows the trend line, basically what's happened here is that stocks typically oscillate between two lines. Now, the bottom portion of this line, I believe, is the 10-day exponential moving average. As you can see, yesterday it pulled back down to that. It hit that, and it pulled back up. So I do believe going into July 19th, I do expect it to move basically up to this red line based on the fact that it's bounced once, twice, basically 3 times since its reversal. This black line here is the reversal line. I'm sorry that we're having issues with the bandwidth. So the stock chart is flickering in and out, so I apologize for that. But I do think we have seen some support here at the 10-day line. So hopefully, it will get support of that and it'll start moving back up again. one concern is the RS line is pointing down. It's at 90 now. As long as it's above 80, of course, I'm definitely liking it. But I think we're going to get some, hopefully, some power coming into the split. I'm going to take a look at this. For the last 1, 2, 3, 4, 5, 6, 7, 8 weeks, it's been up. This week, it's been down on a weekly basis. So I'm fairly confident that we will turn the corner and move higher into the split. So I appreciate that question. That's a great question, and you know, hopefully, hopefully I'm somewhat right about that. So we'll see. Thoughts on Volkswagen? You know, the automobile manufacturers have not been doing as well as you would have thought they would have done. But Volkswagen is definitely probably going to be the king of the electric vehicles. It's going to be basically probably a battle between them and Ford. But let's see. I can't remember exactly because it doesn't trade. It trades as an ADR in the U.S. So I have to find out what the symbol is. VOLKSWAGN symbol. And basically, what an ADR is that it's what they call an American Depository Receipt. I'm going to see ADR. Let's see if I get it. Okay, it's a VW VWAGY. All right, that's the symbol. Had to look that up because I didn't know that offhand. VWAGY. Let's pull that up. All right, this is Volkswagen. And by the way, I just wanted to show you it. You can see Volkswagen AG ADR. That's American Depository Receipt. So this actually trades in New York, but it is a European exchange. It's in the Frankfurt Exchange. Okay, let's take a look at the chart. On the weekly chart, we do have sort of a consolidation. It's fallen below the 50-day line. It does look like there's some good activity here. We've got earnings in about 20 days. Let's take a look at the daily chart. You know, it just doesn't look that compelling, though the relative strength line has been moving up. So let's kind of take a look at the checklist. The checklist isn't bad. It's 77, and I think we have to compare it with its peers. So let's take a look at the checklist for Tesla. And of course, Tesla is the most valuable automobile company currently. And of course, the stock is a lot more expensive. Yeah, same checklist, 77%. You know, I think Volkswagen is okay. You know, I think it's okay. I actually think right now, if you're looking to the autos, I think your best bet. And now this kind of sounds really strange, but I think the best bet right now is GM. To be honest with you, I think it has the best chart. Well, I said that it had the best chart. It did have the best chart. I haven't looked at it in about 2 or 3 weeks, but it looks like it's fallen back too. So, you know, I just wouldn't be in the autos right now. It's just the autos. Right now, the automobile manufacturers are dead last. They are 197 out of 197. This is why I just don't think you want to be in the autos. I really don't, because right now they are the worst performing. They are the worst performing sector. So let me pull up the sector list to kind of, you know, to illustrate this, because this is sort of something that you know, can be kind of confusing. Because last year, you know, this was the best sector. It's interesting, mainly because of Tesla. But this group last year, the automobile manufacturers group, last year was the best sector. So, but unfortunately, right now it is the worst performing sector of them all. So I'm going to kind of go over here to the list. Now, I've sorted this descending. So the worst sectors are at the top. Right now, the worst sector is automobile manufacturers. Second worst is alternative energy, and then the third is solar. So alternative energy, automobile manufacturers, and solar, some of the worst. Interestingly enough, the oils tend to be some of the best. But let's take a look at the automobile manufacturers to kind of look. I mean, I do think that this is sort of like, you know, arranging deck chairs on the Titanic right now. I just wouldn't be in them. But basically, let's kind of look to see, you know, what are the top stocks. Well, the best one is Honda right now, and then Toyota, and then Stellantis, and then General Motors. So it just really is not good. Everything is off their high. Volkswagen is a big company. It's one of the most valuable companies out there, and it does have the highest relative strength. But I still think the sector is terrible. So right now, I just think you got to be super careful when looking at the sector. I just don't think it's good. Now, conversely, let's take a look at what is the best sector. So I'm gonna look at the best sector. Now, no surprise, guess what? And this has been the case for the last 3.5 months. The number one sector in the economy right now is oil and gas. Okay, believe it or not, oil and gas is number one. Now, I don't have nearly enough exposure in this area, but this is if you're looking for a sector that has been doing well and is probably going to continue to do well, this is the sector. It's oil and gas. Right now, the number one rated stock in this area. Now, this is not the major oil companies; these are the drillers. Is Danbury Resources, and this is actually a company here in Plano, believe it or not. And it is pulled back. There may be an opportunity to buy Danbury Resources. I would constantly consider this because this has been a very hard stock to buy up until now. It just has not been viable. But it's pulled back and it looks like it has bounced on the 50-day line. Therefore, I'm going to draw a little bit of a cheater here. This is called a reversal line. And what I'm doing is I'm setting an alert on that line. Let's see if I can go to the weekly chart and do this. Okay, let's go over the weekly chart. Yeah, see, it came down and it touched the 50-day line. This is something that you might want, depending on how this trades. On Monday, this might be something that you might want to consider. I do think this probably will reverse higher. That's my guess. So on Danbury, I think what we could do possibly is look at a buy stop limit order. Now, where would we put that? Well, let's take a look at it. I think that if it trades above the 21-day line, and I'm gonna see exactly where that is. I think if it moves above this 21-day line, which is 73.69, and that's the 21-day line, you could buy that. So if you were to set a buy stop limit order on Danbury Resources, which is the number one stock in the number one sector, you would want to set it at a stop at 73.69 and then a limit order at 73.79. So that's how I would play that. So I would not be interested in Volkswagen. I think it's in the worst category right now. I would be looking possibly to get into one of the oil stocks because they're doing the best, and that might be a way to do it. Danbury Resources, symbol DEN, you could possibly go in with a 73.69 stop, and then a 73.79 limit order. And this is a buy stop limit. So you, instead of doing a stop loss, you set it to buy, and then you set it to buy if it moves above 73.69, and you saying you can buy it from 73.69 up to 73.69. So that's kind of the that's kind of the look there. There we go. Oh, there we go. Get my camera back here. So let's take a look at the next question. Thank you so much. I'm going to take a look at people that are coming in from TikTok. So Jim, how does QS and SL look? QS. Okay, these are probably not the best stocks right now, but let's look at QS. QuantumScape was a big deal. Of course, they are a battery manufacturer, and there is going to be a tremendous need for batteries. This chart on QuantumScape just is not a great chart. Now, I did draw a reversal line here. It did move beyond the reversal line, but since then it's gone sideways. Here's the thing with QuantumScape. I think you got to be super careful with this one. It's pulling back. It's not in a good area. It's called it's the original equipment auto truck area. sector 150 out of 197. So this is not a area that you want to be in. So my answer to this, unfortunately, would be just not a good buy. Just not a good buy there for QuantumScape. So just try not to buy this one. Right now it's pulling back. Maybe we'll see something. Maybe we'll see something happen here. But right now, I think you got to be super careful when it comes to QuantumScape. I just don't think it's a good buy right now. Oh, interesting. Thanks, Cheat. Newegg. Let me take somebody else just before I do that. Thank you. Sorry about that, Cheat. What do you think? KO. Okay. KO is I think it's the ultimate the ultimate Warren Buffett stock. Of course, it's Coca-Cola, KO. And I am not a super fan of it, but it is in a buy zone right now. So that's something that you definitely can consider here. Very long consolidation. It a secondary consolidation. Then there was a buy point at 53.94. It went into this handle. So the question is, can you buy it? Now here's a little trick that I learned, and I think it's a really great one. When you have a handle like this and it's in a consolidation, what you want to do is you want to draw a reversal line. Oops, let's see if I can get it in there. You want to draw a reversal line and like this to see if it can move above that 50-day line. So if it can, then this might be a very early buy point. Now hopefully we'll get my cursor back here and I'll be able to set the alert on that line. But basically with Coca-Cola, the situation is it's not a buy right now. It could be a buy if it moves above this line. So that reversal area is about 55. Currently it's a 54, 48. So it could possibly move higher on a reversal, and that might be an early entry. But I just don't really like the stock. I mean, it does have some very good earnings. It's very consistent. And this area is not bad. It's 43 out of 179, but I am not a huge fan of Coca-Cola. I know this is the stock that Warren Buffett said that he would want to hold it forever, but I'm not so sure. It's only got a 55% checklist on the O'Neill checklist, so I am not a fan of it. I just think that there's better merchandise out there right now that you can make more money on. One piece of merchandise that I do kind of want to show you that I do think is set up very nicely, and I do think possibly is a buy. Now, I did buy this one myself, and that's PayPal. I know I keep reiterating on this, but I do think that this one is a superior stock. And if you're looking for a leader for the future, I think PayPal might be it. It's a matter of fact, I just did yesterday I did an invoice on PayPal. They whacked me 50 cents, and I was like, man, I hate this, but what are you going to do? Everybody's got PayPal. I've had it for 20 years. I mean, in terms of the service, I haven't had the stock that long, but it's getting ready to move very nicely up to this 309 area, and it's right now in a buy zone at 321. So this is, if you're looking for kind of a good stock that's at a buy point right now and a good location, you might want to consider you might want to consider PayPal. Now, since I bought this a few days ago, I'm up $8 on it so far. I bought at 291.75, and my stop is at 296.20. So this is probably going to move higher. I still think it's buyable. I think it's still actionable. Wait for see how it opens on Monday, but I do think that this one might be a good one if you're looking for something to get into. PayPal. All right. Let's see. Let's look at this one. Okay. Do you think SKO is going up before earnings on the 21st? Let's look at. Oh, okay. This is KO. You know what? I don't think so. Maybe, but I think earnings are going to be weak. Probably on for Coca-Cola, but we'll see. Let's look at KMX and see how that is doing. Checking in with that. KMX. And there we go, Carmax. This has been a tremendous company, by the way. This one, I wouldn't have said it, but Carmax is doing great. I mean, everybody that, even though there's one area here that I don't like, it's in the retail automotive area. It's one 42 out of 197, but this is a good company. It does have a relative strength of 77. I do think this is actionable, though. I do think this is actionable. I think as the shortages in used cars continue, companies like Carmax are likely to benefit from this. So I do like this company a lot. It's in a good position to buy it right below the 138.77 buy point. So I do think that's really good. I definitely think you could definitely buy this one right now. And it's Carmax. KMX is the symbol for that. All right, thoughts on Apple next week? Of course, everybody probably knows I have a position in Apple. I've been trying to build it. I have a spread on Apple. I have a bull call spread on it, and as well as the actual shares. Apple finally has gotten. It took a long time for Apple. It split 4-for-1 back on August 31st, 2020, and then it has not equaled. It has not equaled the high. The intermediate high was 145.09. Currently, it's at 145.03. I just think that this is going to continue to go up. It's almost too. It's almost too extended to buy it right now, but I still like this stock an awful lot. I think that it's likely to be up next week. I do believe that it could go as high as as 145. But I just kind of want to take a look at this. As you can see, this is just again, there's certain stocks out there that are just fantastic. This is one of them. It's at an all-time high. The checklist is excellent. The only thing here, this relative strength is relatively low at 70, but everything else works here. It's an 88% checklist, and by next week it'll be 100%. So I definitely think this could go easily to easily to 147.50 by the end of the week. It's not a fast mover, but it's got a lot of power, and it's just looking very good right now. Apple is definitely, if you're going to be in one of the big cap techs, this probably is the one right now. At least for the time being, this seems to be the best. So, very good. Very good. Robinhood does not allow us simultaneously buy and sell. Would you have enough? We would have enough buying power to buy. Well, here's the thing about Polly. Thanks for that. Unfortunately, Robinhood, a lot of people use it. A lot of people really like it, but it has some very big limitations in terms of what you can do on it. I personally use TD Ameritrade, and the reason I do is because I get fills on my orders, and you do spreads. I can just anything that a professional can do, you can do on TD Ameritrade. You might want to look into possibly getting a TD Ameritrade account. Here's the thing: if you email me at DallasTradingFloor@gmail.com, I can have something sent out from TD Ameritrade. I don't work for them, but you can probably get. I think if you're referred, you have to be referred on this one though. I think if you're referred, you can you can get potentially. I think up to. I think you can get up to $150 extra, depending on the size of the account, if you're referred. But you have to be referred to TD Ameritrade by somebody that's already a user. Now, I can do that, all you need to do is just send, just send me an email, and I can get that right out to you. So, so basically, let's see if I can do that. Yeah. So if you're interested in that kind of thing. My email address is, it should show it. Okay, well, that's why, because it should have. Let's see if I can get it to stop the ticker tape. All right. Let's see if I can. There we go. So yeah, if you want to get a for TD Ameritrade, if you want to shift over to TD Ameritrade, I think they offer $150 if your account is worth $3,000 or more, and that's free. But you have to be referred. So if you could just send me, anybody can do this, but I do this all the time. And so just send me an email at DallasTradingFloor@gmail.com, and I'll get that right out to you. And you could probably end up with $150 credit. But I like them because you can do any kind of trade on TD Ameritrade. But thanks, Paulie. Thank you very much for that. All right. Fernando, thank you. Level 3 and 5. Okay, okay. Oh, it does. Okay, good. Well, thank you. Thank you very much, Fernando. Yeah, level 3 is you basically have had several years experience in um, trading options. That's absolutely right. Thank you very much. Thank you very much for that. Okay. Is KNDG good time? PayPal, good time to sell. You know, I wouldn't be selling. I wouldn't be selling PayPal right now. I'd be buying it. As a matter of fact, I've been buying PayPal. Now, for KNDG, I don't know about that one. Let's look at it. KDNG. There's an old saying: you want to let your winners run, and I think right now, at least for the time being, PayPal is doing very, very well, and it's right now it's in a buy zone. So I don't think you want to sell. I think what you want to do is just move your stop loss up on this one. I can't seem to get KDNG in there. I apologize. Cannot seem to do that. But let's see if we can take the next one. Oh, there we go. Uh, DKNG. I apologize. DraftKings. Okay. DKNG. Thank you for correcting that. DKNG. Let's take a look, and that's DraftKings. And of course, this is a very successful IPO, as everybody knows. I'm going to go to the daily chart here to kind of look to see. We are still below, unfortunately, and as you can see my marks down here, I'm kind of waiting for this to recover. We're still below that 250-day moving average. I probably would not be a buyer here, but I do think that if we move above this 200-day line, I think then we might want to consider it. Now, the question is, where is that 200-day moving average? I'm just going to put my cursor right on it to see exactly where it is. I think what you have to look at for DraftKings is it needs to really move above about 53.10 in order to be actionable. I like this stock a lot, but currently it's in a downtrend, so you don't want to buy it here. You want to make for it to confirm. You want to see it confirmed to the upside. One of the things about this chart right now is that the 50-day line has dived below the 200-day line. That is not a good sign. That is what they call the death cross. So right now, the stock is weak. DraftKings is weak, and we need to see it much stronger before we're going to buy it. So I think the best thing you can do right now with DraftKings is to watch this stock. I think that's really going to be your best. That's really going to be your best best situation here. So you need to watch list DraftKings. DKNG. So and then you just really have to wait on this one. You just sort of have to wait, and it's sometimes it's painful, but I think you got to watch list DraftKings right now. It's just not at the position where you can make that that move. I just don't think it is, unfortunately, because I do like the stock a lot, but right now it's not set up properly. All right, Datadog, DD. This is a question from D. I haven't seen this one in a while, actually. I think I own Datadog for about 5 seconds last year. No, I'm sorry. This is DuPont. I thought we want Datadog. I think it's dog, isn't it? D-Dog? Or is it? Let's see if it's dog. I'm going to assume it is on this one. Dog, I think it maybe. No, that's ProShares. Look at D-Dog. Is that it? Yeah, Datadog. Okay. 3 times the charm. 3 times the charm. Well, Datadog is actually surprisingly looking pretty darn good. There is a buy point on it at 119, and I do like the stock. It's moved above that very critical 200-day line. Now, it looks as if the 50-day is catching up with it. I probably would not be a buyer here, but I'm going to reactivate this. I had an alert on it. Basically, if it moves above if it moves above about 111.49, then I'm possibly interested. So I think with this one, it may be getting ready. It's looking very nice. It's got a cup base. This is a good action on it, but I still think you got to wait. It's not ready to buy this one yet. This is a little tougher market to buy, and it's not as powerful as it was at the beginning of the year. So I think you got to watch list this one, but Datadog is looking good. You should put that on your watch list. It's not ready to buy yet, though. Is PayPal a buy? Well, I think it is. I do. I think that PayPal, we are starting to see some of the strongest stocks come out and show themselves, and I think PayPal is definitely in that category. I'm going to go back to the chart here for PayPal. Of course, it's PYPL. That's a symbol. And I just want to show you that. Here we go. All right, as you can see, I've noted it here. I did buy a half position yesterday at basically at 292. It's at 300 right now. It's up about $8 in about 2 days. I do have a spread on this one. I did put on the spread when this thing moved for the reversal. This is one of my favorite stocks. It is getting very close to its all-time high, which is 309, and it does look like it's going to move at least through that. We definitely are in a good situation here. This is buyable right now up to a price of, let's see, up to a price of about 310. We can buy PayPal. So right now it closed at 300. Let's see how it opens on Monday, but I definitely think PayPal is a buy right now. It's one of the stronger stocks in the finance credit card area, which overall is not that strong, but PayPal is. So I think PayPal definitely is in that area. How do you determine sell price? Very, very, very good question. Typically, the way I determine sale price is if I am holding a stock that is up. That if I'm holding a stock that is up 20% or more, usually 20 to 25%, I start to consider to sell it or at least to reduce it. Now, I do have a stock right now that's in that category, and that is DocuSign. I have been holding this, and I want to show you this stock because this is the proper way to sell, I believe, and that is if you have a stock that has moved up 20 to 25%, that's where you want to consider possibly selling it. So I'm gonna come on over to my small portfolio here to show you that. I did have one. I did have a stock like that right now, and it is a DocuSign. Okay, so right now I'm considering selling my position because I'm up. As of today, I'm up 24%, so I'm almost at 25%. So I probably will sell this. I probably will sell this stock, but then I probably will, believe it or not, buy some more because DocuSign is looking very good. So probably what I'm going to do is sell half of my position, and then if it moves above the 290 level, which it looks like it might, then I possibly will buy some more. But I'm going to probably do some profit taking in DocuSign as we speak because I'm up about 24% in about 30 days on this one, about a month. So 20 to 25% typically is a very good place to start taking profits, and I definitely looking to do that in DocuSign. Now, I'm probably not going to take 100% profits in this. I'm probably going to take half of the profits, and then I may, if the stock moves up, continues moving up into the buy zone, buy more, and then I will have I will basically move my average price up. But I want to take profits while I can. So that's a very good point. So 20 to 25% is where you start wanting to take a look at taking profits. Let's look at General Motors. I think I did pull up General Motors before. It's off a little bit, but it's probably of the autos. It's probably one of the best. I just don't recommend right now being in the autos. The autos in general are not the best category. It's the worst category currently, and as you can see, it's fallen off, but it's pulled back up to the 50-day line. Now, with a pattern like this, we could be seeing, because of selling, we could be seeing the beginning of potentially a pullback on General Motors. So I just wouldn't be in this stock. This whole area, unfortunately, right now is not doing well. And I just kind of want to show you, this is the weakest section in the entire market is automobile manufacturers right now. So the best performing stock in automotive right now is Honda, HMC, and it's off 3.9%. So this, and I'm going to bring up the chart for Honda again. It's still above the 200-day line, but This is just not an area you want to be in. So I would avoid Volkswagen, Tesla, GM, Ford. I mean, the list goes on. Because right now, we just want to see more strength in this sector. Right now there's been the money has been flowing out of this area into other areas of the market. So it's been flowing into oil and gas in a lot of other areas. So right now, I don't think we want to be in GM right now. I just don't think we want to be in it. Snow saw a push today. How much higher? I'm in at 217. So let's analyze this. People really like this stock. I was in it for just a tad bit, and of course it's a database stock. It's pre-built a data warehouse. It's a relational database. SNOW, of course, is the symbol. So let's look at Snowflake. Um, there's just a lot of institutional support, Matthew, for this one. I did draw. I did draw a line here. It is looking like it is finally getting some support. I mean, there's some big buying coming in here today. That's definitely the case. I am still not convinced with this because, but it did move above this very key level, this 255.99. So if it can hold this, maybe then we could start possibly looking to get in. It reversed and then it went up to 299 and then it pulled back, and now it's making another attempt. So there's definitely some resistance at the 255.99, 256 level. It's at 269. It's above that. So let's see if it can hold above 255.99. If it can, then it might be viable. But right now, I just wouldn't buy it right now. It's just not at a good place to buy right now. So that's the story on that. Let's take a look at some questions from TikTok. Thank you very much. Um, how will cruise stocks do? I don't know. People really like the cruise stocks. I can't see buying them because basically due to the COVID thing, they're looking at about 2 to 3 years of loss. I don't think they're going to be making a profit. But let's look at RCL, which is of course Royal Caribbean. And it's just not a very impressive chart, unfortunately. It's just kind of a sideways chart. Let's look at the weekly. Let's see. Yeah, I mean, it really needs to be above about 129. I just don't think it's going to get there. I just wouldn't be in this one. I just think there's better merchandise out there than the cruise lines, especially when we still have the potential of another shutdown with COVID. So just can't see it. All right. Jim, I have been in stock AR. Your thoughts if I should add another position? AR. I don't know what AR is. Artero Resources. Okay. Engagement. Okay, it's oil and gas stock. Well, maybe. This is not a bad idea. Yeah, well, oil and gas is, this is a good looking stock, by the way. Yeah, this is a good looking stock. It's in the #1 sector. U.S. oil and gas, U.S. exploration. So this is very good. Here's one thing I would do if I was in the stock. I would push my stop loss up to about 13. I would have my stop loss in there right about 13, right about here, right about where the, right about where the 50-day line comes in. So I'd be looking to put in a stop loss there at about 13. But I think you're looking good on this stock. It's got a relative strength of 99. It's in the #1 sector. Yeah, I could see where you might want to add here. I think you could really actually. It's not a conventional place to do it. It's not a basing function, but I'm really liking this. Look at how many funds are in it. 402 are in this. This is a very good stock, by the way. This is a very good stock. So I have a lot of confidence in this. I have a lot of confidence. I definitely think you could add here. Let's kind of look at let's see what else is in the sector. And by the way, this is the #1 sector, and it has been for about the last 3 months. It's the oil and gas exploration sector. And let's see if we can get that to come up here. Come on, there. It's not being very cooperative. Let's see if I can get it to. Well, no, I can't get this one up, but there is another way. Of course, we can alternatively do it. So let's do it the alternative way. And let's go to that sector. Okay, this is the U.S. oil and gas area. This is the overall chart for it. It's really quite good. Let's see the top stocks in here
Goodrich Petroleum, Epsilon Energy, Turpus. You're right. Yeah, you're in one of the best stocks currently today. The top performing stock is Goodrich, and that is just doing fabulous. Look at that. It's really, really good. This is a $16 stock, and it's just looking fabulous. So this one, you might want to put this on in your radar as well. GDP, that's what the name of it is. Goodrich Petroleum, GDP. This might be one that you want to look. So, but I think AR is excellent, and yeah, I think you could definitely add to it. Absolutely. All right. Prediction for 16th July before Plit. I think it should be. Hopefully, we should see. We should see Nvidia probably trade up to about 830, maybe 825. I don't think it's going to move much beyond that, unfortunately, because it's been rejected several times at that level. So I think that's probably going to be where it tops out before the split. All right, Tastyworks is also yeah, absolutely. Ravi, very good suggestion there. Tastyworks is it was designed by Ted Sizemore. He also invented. He basically wrote Thinkorswim. Tasty Trade is excellent platform for options. Excellent. Excellent. Just thank you for that comment. Appreciate it. Yeah, I highly recommend anything that the Tasty Trade people do. I wish I wish I was as good as they were, but definitely something a good platform to trade options on. You can really do well, but Tasty Trade is very good system. So highly recommended. Highly recommended. Thank you very much for that, Ravi. I appreciate it. Those guys, along with Thinkorswim, they've really revolutionized the trading of options. I can tell you, it makes it so much easier. Let's look at Amazon. Let's look at the Amazon trade, and I'm gonna kind of pull that one up now. I did. I want to see how I'm kind of check in with this one. This was a spread trade that I put out there a few days ago, and I kind of want to check a lot and see kind of how it does, because when I do the show, of course, I can't watch everything at the same time. But we ended basically, it's off a little bit after hours, but we ended up at 37.19. I'll say about 37.20. Let me see if I can find sort of how we did on this. I'm gonna pull another window up here. Oops. Let's see if I can get that window up. Yeah, there we go. And see if I can get that in there. So slides. And let's look at the Amazon trade. This is a trade that I put out to everybody. And by the way, sometimes these bull call spreads could be very good. Let's just kind of check in on this one today. And let's get that up. Okay. There we go. So let me put that up. There we go. There. Okay. So basically, this is the spread trade that I put out on this. And basically, we went into this one. Let's see, what was the date on this one? Yeah, the 7th, July 7th. So it's 2 days ago. And let's kind of check in to see how we're doing. Now, the predicted value for this, in terms of its value, we closed today, Amazon closed today at 37.19. So let's kind of go up there, 37.20. That's pretty close. And move over here to basically today. So it looks as if we're at about 330. So this should be up about 330 since when we came into the trade. Now let's look at the potential on this trade. This is kind of an expensive trade. I mean, it was $3,000 to get into it. We're currently up about $300. We're up about 10% in 2 days on this particular trade. There is a potential of $1,930 profit on this one. So we're doing pretty good. So if you take 300 and you divide it by 2,000, you're going to get about 20 cents. So we're up about 20% on this trade so far, and that's looking pretty darn good. I still think you can do this trade because I do think that Amazon has a lot of potential right now. It's based and it's moved beyond a very specific buy point, and I do think that we are in a situation now where Amazon probably is going to move higher, at least in the short term. So let's take a look at the Amazon chart. I'm looking at the weekly, but I'm going to come back to the daily here to take a look. Yeah, we're definitely in a buy zone with Amazon. Part of the reason I did the spread on Amazon and didn't buy the shares is, look at the price. It's 37.16 a share. That's an awful lot of money. Whereas with the spread, I can control 100 shares of this, which would normally cost me $371,600. I could control that literally for $3,000. So that's why I did that bull call spread. And I do think that it is still really good. We're in a buy zone, so that's looking pretty good for that trade, at least for right now. So if we pull back below about 3,400, we're probably going to be, you might consider closing it. But right now, I think we're good to go on that trade. I really do. So that's looking pretty darn good. And hopefully by tonight, I will have the trade on Wells Fargo out for everybody. That is on the Action Trade Alerts. And by the way, if you're not signed up on those Action Trade Alerts, I know I show this all the time, but it's kind of a good idea to get on the list. And it's just easy to do. Just go to www.senfox.com/Dallas Trading Floor. And by the way, if you're on TikTok, super easy. Just go to my profile, click the link, and then first and last name and email address. And I'm going to try to get this spread trade on Wells Fargo out tonight. It's an earnings trade, and I think it has some good potential. Well, let's see if I can take one more question. Thank you so much for being so patient here. This question on space, one of my favorites. Is it a buy if the space trip goes well? I just don't know. Hopefully, Richard Branson will go and into space, and everything will look good, and it could be so good. But it also, if this thing blows up on the pad, mamma mia, it's going to be bad. So I don't know. This is the chart on it. I've been in it. I think if there's a success on this one, and I'm gonna kind of guess what I'm gonna do is I'm gonna put my buy stop limit order in, basically at this level. I'm gonna put on space. I'm gonna put a buy stop limit order on at 55.10. So 55 is the stop, and 55.10 is the buy order. If this thing's successful, this could easily go up to 82, 90, 100. This could go high, depending on if it's successful or not. But we'll see. I just hope that he doesn't blow up, and I hope that everything works good on space. But this can be I've made very good money on this, and I probably will have at least a small position set on this one. So, but we'll find out on Monday. I'm going to be back on Monday, by the way, at 2:30 Central Time, and of course that's 3:30 Eastern. And hopefully everybody will be back with us. There's going to be some good profit-making opportunities. Right now the market is a little bit funky. It's very hard to trade, but we're still in a confirmed uptrend. So we don't want to be totally in cash right now. But if you're 50% in cash, don't be alarmed because it's better to be prudent right now. It's a tough market to trade. So I'll be back tomorrow. I'll be back on Monday at 2:30. Happy trading. Thanks everybody. See you on Monday.